Hey, everybody, welcome back to Fintech Fridays. It is Friday, thank God. And we have a very special guest. Katherine Campbell is joining me today. And as our loyal watchers and listeners know, usually I'm talking about cool technology, cool products and services, and kind of introducing some new products and companies to the market through this podcast. We're going to change it up. Not that Catherine's not cool; she's one of the coolest.
Oh,
But
I thought,
we're gonna change it up a little bit today and kind of talk about the the mortgage market and specifically kind of the mortgage marketing space from a digital perspective, because Catherine's one of the experts in that space. So that's our what we're going to cover today. If you've tuned in for something different, you're in for a treat. Let me tell you. So,
I would
Katherine, first
say
of all, welcome and thank you for joining me.
thank you so much. It's great to be here. We've been trying to do this, Brian. I know we're both very busy, but so respect everything that you have done, particularly in the last few years. I mean, think about how far we have come in this industry. And I've been in marketing, digital marketing, since I was in San Francisco, the very early days of it, like in 1999. I want to dive into that .com thing. And it wasn't very long before it became .bomb, right?
Right.
In 2003, we all had to like get away from it to figure out because everyone lost funding, and I became a loan officer actually for Wells Fargo Bank, and that's where everybody went was mortgage, right? The mortgages
Yeah.
were roaring, and then as soon as we got funding, I got back into technology. And what happened in those early days was that we could say, and I still should remember the guy who says this because I use his line all the time. I know 50% of my marketing works. I just don't know which 50% of it is. The first time I went to, there was a major digital agency out of Seattle. And I asked my boss if I could go up there because I wanted to understand these analytics behind some of the sites that we were trying to promote. And we were just doing the early days of advertising online, a banner ad, and a button ad. And we're going to do
Yeah.
this called a pop-up. It'll just pop up and everybody will just buy it because it popped up. And then the pop-up blocker was like 10 seconds later, came up. So anyway, I go to Avenue A is the name of the agency, and they explain the hybrid model that they would like to implement. So I think this is like 2001. Okay. And what they would like to implement is that instead of just a CPM, which for advertisers, we know that's a cost per thousand. So every time, 1,000 people look at your ad, you should pay $20, right? That should be
Right.
worth $20 or whatever, whatever the value is of the ad. Some people, we were only paying $3 too, because their brands were not as known. They said, what we're going to do is we can tell if someone clicks the ad, if it came from your website or not. And we had websites like sports websites. We were aggregating content for women's websites and all that stuff. And so since we can tell if it came from your site, we will give you so much money per click. So this was the first hybrid concept. And then they said, now, this was like a few months later, we can actually tell if there was an acquisition. Did they actually purchase? And just to tell you how sophisticated our advertisers were at the time, this particular big advertiser, big spender, was Time Magazine.
Yeah.
Can
That's
you
pretty
imagine
big. Yeah.
clicking over? So anyway, I was like I was like, this is so cool. And none of my bosses, which were much, much older than me and had been in advertising for years, thought anything was cool about this,
No.
But I love the performance marketing. And that was when it really began, when Google Analytics and these players came on board and could tell us success. That was either very exciting or you got out.
Yeah. Yeah. I think your experience is so unique in terms of being a chief marketing officer in mortgage, because you started in traditional, kind of the traditional media space, not financial services specific, certainly not mortgage specific. So what you just described are things that a lot of people inside of mortgage, certainly at that time, had no clue,
That's right.
what was going on. But then your pivot from there into the street level originations, facing off directly with consumers in a sales production role, to then move back into the marketing space to support mortgage. I think it's so unique and valuable that I think people need to understand that your experience uniquely qualifies you to have these conversations and to talk about what works and how consumers think, especially in the digital space.
Absolutely. Thank you. Well, that, when I joined mortgage full time, that was in 2017. And the first company I was with brought me in because they wanted to run a point of sale system. And I'll just tell you, it was Blend, and they were very nervous. Blend's on Kearney Street in San Francisco. So obviously when they came in to do the demo, I'm like, oh, hey, yeah, I know right where you are. And tell me that you're recruiting from Intuit, because that UI of like TurboTax is so good. And they're like, yeah, we actually do recruit from Intuit. I'm like, good, because your UI is really good. So, understanding the consumer earlier than the mortgage industry was something I could really help this company with. And they said, gosh, you understand this so well. Will you come in full time? And I was like, it's just a point of sale system. It's field, first name. I can do this. I don't, it was consulting at the time. And they said, no, we're nervous. It's a big spend. We don't understand it. Will you come on full board? And when I looked at the mortgage industry at large, it was just like a kid in a candy store. It was so exciting how much opportunity there was. And it was really the last industry to evolve, right? It was the last industry, the most laggard in technology. And so I dove right in. And, what happens is that anytime there's change, okay, go back to the 70s. Anytime there has ever been change where a technology, a computer was going to come help you do your job, right? Even underwriting, automated underwriting systems, AUS, when that first came out, all of the underwriters thought everybody was going to lose their job,
No,
and so
we're not going to do this.
Right. And then here comes the point of sale system. All the salespeople, they're not going to need me. I'm never sending that link. I'm never going to do it. Like the taxi drivers could really compete with Uber. Just don't use Uber. Just have a smelly, crappy experience with me. Keep doing that. So it's this inevitable evolution. And the point is that if technology can, it will. That's just the bottom line. And so clearly, look at us today. The point of sale system was highly utilized, really starting 2018, but through COVID, right? Absolutely.
Yep. Yeah, and everybody had to get in that space.
That's right. And guess what percentage of people worked with people to get a mortgage? 100%.
I think 100.
There's no one was able to get a mortgage without people, right? So we still have underwriters, we still have loan officers. Now, I'm not going to deny that the capability of technology today and the integration of AI into these tools is not going to significantly change everyone's jobs, and relatively soon. I mean, really, the capabilities that technology has really come along. But if you think of any job, I always like to talk about the travel industry, because we do not drive around and look for a travel agent so we can write a check for an airline ticket and get the tickets in our hand, right? That was in my lifetime. And I'm a little older, but I'm not that old, right? So that's what we used to do when we were kids. And we wouldn't even think about that today. And so it doesn't matter which industry you're in. And one thing this industry is learning, I think, but it was very hard to sort of understand, is it's the technology as it comes into the industry is not some technology person's job, right? I was the CDO, now I'm the CMO. And I tell you, there's a very fine line between those two, because you could hardly do marketing without having performance, and scalability and measurement behind it, which involves understanding and integrating the technologies. And, they just, weren't really working in tandem with across departments. They weren't really, these companies were telling the closing teams, hey, go get an e-closing solution. Telling the sales team, go get a point of sale system you like. Telling the marketing team, go get a CRM you like. And the integration and this syncing them, understanding the sometimes redundancy in them now, was not really part of the initial plan. So, here we are, 2023, the future is very bright. There's been tons of money put into technology. And in the South, I always say this, there's a saying in the South that says you got to hurt them to heal them. You ever hear that? In 2020, nobody was hurt other than the fact COVID was going on. The mortgage industry was like, bring it on. Oh, you want us to use a link? That's fine, because I don't have time anyway, right? There was really no hurt to be healed other than the fact we could not meet. And so the technology healed that problem very quickly, very timely. Today, this market is hurt, right? This hurts, this market does. And so the healing is we have to actually get efficient with these tools. there is an expectation today because of how much money has gone into marketing. Look at the big digital marketers, go online and get a loan. Love it. That's why I tell my team, you got to love when you see that, because we can't afford that. We can't afford a nationwide radio, commercial. But since they're driving them to the web to search, I can compete right there. We can afford that. So now the expectation from the consumer is changing for mortgage because they started the product online. So if I started the product online and I could give you all this information, I could just log into my bank accounts and you pull my transactions. I could just, put my social security number and trust that you've pulled my credit somewhere back there. There were obviously a different agency and all these things happen. Why am I having to come see you to sign the final documents? I signed all the initial disclosures online, So the biggest shift, I believe, that's happening in the industry today, that certainly is affecting marketing teams, is and frankly, I think it has everything to do with FinLocker and what you're doing, is the communication and the seamlessness for the borrower. That all decisions we make today about technology and the processes we put a borrower through, as well as our own loan officers and ops teams through, needs to be a borrower first decision.
Yes.
That's a major flip. We've always been so LO decision, whatever the LO wants. And they certainly have their pulse to the market. There's no doubt about it. Loan officers do. But when you really understand that, when you make that it very easy and you use apps like FinLocker and, some of the AI where they can get instant information, the LO becomes the hero, not the not needed. They become the hero of all the work that we're doing back here. The LO is the face and becomes the hero.
I love that. I've been talking about this concept of scaling locally, and you kind of hit it on the head. The biggest brand in mortgage, I happen to be in the Mortgage City. Used to be known as, we were not Music City, Motown, Motor City. Today we're the Mortgage City, Detroit, right? And the two biggest lenders happen to be, I'm equidistant between the two of them, so I'm sometimes ducking from the gunfire between these guys. But Quicken or Rocket in particular, we know that they're the master of talking to consumers about home financing, right? And what they haven't solved for, I think they're going to try to figure this out, and they're seeing the value in the local expert, the local professional, the local mortgage originator, coupled with their mega brand and their marketing and their technology. And I think when I talk about scaling locally, what I'm really saying is that the value of the local loan officer has not been minimized. It's actually more important today than ever, and given the type of market we're in, which is all purchase, right? And it's all purchase, and it's 30 to 40% first-time home buyers. These are typically home buyers and consumers that need help. They need expertise. They need financial mentoring and coaching, and not knocking, call centers, but you just don't get the same caliber of professional in those platforms. So the scaling locally to me is all about, as a loan officer, aligning yourself with a platform, a lender that has the right tech stack, the right digital experience, that's consumer first, that values me as a professional, as an expert. And when you couple those two together, I think that's like a winning strategy that can take on the Rockets of the world. I'd love your perspective on that.
I absolutely agree with you. I even call it hyper local, right? Because, some of these guys, you'll get an online lead from the website, let's say, and then, you send it off. And since we don't have any branches in Florida, I'll use Florida as a neutral Switzerland over there. So let's say that somebody's in Pensacola, Florida, and they do an application, right? But let's say we had a branch in Tallahassee, and they found out that we gave the Pensacola lead to our consumer direct team, since we don't have a branch in that region. And they would be like, but we're in Florida. I'm like, okay, well, you can't actually own all for
Yeah.
it. It's expensive to run an efficient website, right? Search engine optimization, often paid search, definitely display. These things are expensive, and the corporation is paying for them. And it's not stuff we even need loan officers to worry about or think about, because it ultimately drives a priority for the result through a search in your region too, right?
Yes.
So
Yes.
it
Yes. Yes.
is for your benefit too. But no, you don't get the Pensacola lead. But let's say that they're sponsoring little league teams. They're putting up bus benches, banner ads, sponsoring church bulletins. They are very active. They've joined groups. They're running parent committees. They're very engaged, and that can go, let's say, even a 15-mile radius around their office or home. Okay. But not really much further than that. Okay.
Right.
Arguably, we could talk about leads being distributed. That's fine within, even a 30, 40-mile range. I don't care. But when you're trying to grow your brand, you have to have a hyper local presence, right? And so
Yeah.
that means map out on a map the 15 miles. Find the hospitals that you can partner with and be a preferred lender with. Find the schools that will let you come and bring donuts on Teachers Day. Like, get more one-to-many and that hyper local effort than trying to do so much one-to-one just with you and a realtor. Because even though the realtor is going to be more than one-to-one, it's still not one to very many, right? If you
Right.
get 3-4 deals from a realtor a year, that's about average from a decent referring realtor. Those that get 20 deals or whatever, those are the hyper LOs, right?
Yeah.
They're not even
Yeah.
listening to our webinar here. But the average LO needs to be thinking, how do I own this 15-mile radius? So I agree with you completely.
I love that. And this is the perfect market, right? Clearly 2.5 years ago, everyone had more business falling out of trees into their lap than they could handle. And consumers, and it was an 80% refi market. So, doing everything, every loan officer was virtually a call center loan officer back then, if you want to think of it that way. They were forced to by the pandemic, and the consumers doing a refi are totally comfortable with that execution. But I go back to the first time home buyer, and there's very few of them that are financially savvy enough to go through this process completely digitally online. They have questions, and sadly, if we think about our educational system, both at the middle school to high school level, and certainly in college, there's not a lot of personal finance, like real practical personal finance, that gets taught. I'm of the opinion that, and the other piece of it is there's a whole financial advisory business that's out there, and those people do great, but those people are probably more likely to work with you and I because of where we are in our life and what we've amassed in terms of assets versus someone who's just starting their financial life. There's not a lot of upside initially for a financial advisor to spend a lot of time with someone who's just out of college. I think the loan officer in the community can fill a massive void around financial wellness, financial education, as long as it's tied to an objective. And the objective is ultimately someday owning a home, which most people want to do that. So I think there's a huge opportunity for loan officers if they can think beyond today's pipeline and put the work in today that's going to not reap benefits till 12, 18, 36 months from now, to really build a strong business using financial education as that starting point.
I am going to have you come speak to our loan officers, Brian, because I could not agree with you more. It is, particularly from getting out of 2020 and 2021, it is so hard to get back to sort of the basics of business. But the basics of business aren't even the same today as they were in 2017, 2018. The consumer's expectation has completely changed. The amount of content available online is very good. We've all been building it out for the last 4 years, right? There's not just one source to go, right? There's lots of downloadable guides and all kinds of information. And so if the LO does exactly that, they think of their jobs a little differently in two ways. One is to be of service to your database. And so you want to grow that database every single day, because you never know when the service is needed. Like, when I'm thinking about getting a car, and I remember you telling me don't get a new car, and I couldn't remember why. That is a great conversation. Oh, that was because we were in the middle of your mortgage. Well, let's look at your DTI while I've got you on the phone. What kind of car do you want? What kind of payment is? Let me work with you on it. I mean, there's
Yeah.
just a simple little task that you've been a resource to someone. Who do you think they're going to call the next time they need the financial transaction that is the one you do, right? So servicing their book of business, could not agree with you more. The other is that it used to be that we started with the consumer with the 1003, and that was so critical that when that felt like it went away, and largely it has, the realtor may even just be sending that link out for you. It's still like, well, where do I fit in this process now?
Yeah.
The loan officer just needs to be available when the consumer decides they're ready to talk. For some of these consumers, it is at the 1003. Okay, well, I'm really confused what you mean by this, right? For some consumers, it's not until final disclosure, right? It's like it just, final docs go. So between chat and text and email and phone, it's be available on all of them when the consumer comes to you. Be sending regular communications, checking in on them from time to time, but don't panic if you've gotten all the way through the appraisal and you still haven't heard from them and you're like, I think we're really doing this deal, right? It's like, this is when they're ready. Just be available because they'll need you.
Yeah, I love that. And I would even add that well before the point of sale, they may need you at the point of thought when someone's just starting to think about what it would mean to own my first home. I'm 23 years old, got my first, real job, but I'm not ready yet. But my goal is by the time I'm 25, I want to own a home. If I'm a local loan officer, I'd be finding those types of consumers all day long and starting to build a trusted relationship with them, helping them for that 2-year period until they're emotionally ready. You're going to be the resource to help them get financially ready. And you said this earlier, who do you think they're going to pick or choose when it is time to get the financing for that home?
And then how many of their 25-year-old friends are like, oh, how'd you do this? Who'd you do this with?
Yeah.
Because for everybody in your database, they have a database.
Absolutely.
So, you got to see beyond when you're servicing someone, just them. It's, who are all the people you know? I love the 23-year-old analogy. It's not even an analogy. That's just a perfect example.
So let's stay on that cohort for a minute. And you kind of already hit on this in terms of content. We know that 23-ish-year-old consumer is native digital. They're born with this thing in their hands, right? So they're always on it. And that's where they're first doing all of their research is on their phone. And I've been studying a bunch of loan officers that are very active on social media. And it's amazing to me how many people are doing their research on TikTok or Instagram or YouTube for months before they're actually going to talk to anybody, right? And so I'd love your thoughts on kind of where we are today and how social media plays a role specifically for the local loan officer. This is where I go back to the scaling locally, because all the things you talked about doing in the community, Little League sponsorship, first-time homebuyer seminars, being at the PTA and at the church, you start adding on top of that a social media presence, and that's where that scaling locally really can accelerate for a loan officer, I believe.
Absolutely, and like for $100 a month. Right. So there's this top of mind, obviously there's very powerful top of mind. It's just, whenever I'm thinking about mortgage, because what are we doing? We're targeting certain audience styles that says you've probably been thinking about mortgage if I have this ad appear in front of you, right? So there's sort of top of mind there. And then obviously it's just that 15-mile radius. You trying to get other people, grow the presence of your page, just general likes and shares so that you can own that 15-mile radius. And that is where social really might be able to help you get to more like a 25-mile radius, right? So absolutely that can do that. It is so critical that people recognize who they're looking to attract. So instead of who they want to be, well, who do I want to be? Do I want to be the mortgage king? Do I want to be the smart person? Do I want to be, the analytical? Like, do I want to talk about the market? Do I just stop and think about who your consumers are? And so when you think about them and how they're ingesting most of their content, it's very casual social media. Here's what I promise you. No matter which of those categories you pick, I pick them all because you know more than they do. on all
Right.
of them. Okay. When it
Yeah.
comes to mortgages. And so it's just a matter of how they're consuming data. I can't tell you how many times I would have loan officers say, "Hey, I just got licensed in another state. Could you please do a social media post that shows the states that I'm licensed in and has my headshot like really big?" Okay, well, all right, we are in, I'll pick a state. Let's say we're in Texas and you just got licensed in Ohio. I am very happy for you, but I can't tell
Yeah.
you that the people who follow you in Texas don't really care. I mean, but they could know somebody in Ohio. Yes, they could know
Yeah.
that. But
Yeah.
here's the deal. Just get on social media and say, I just got licensed in Ohio. Don't forget if you know anybody. And then don't do it once. Don't take our flashy fancy, which is why I started charging $50, by the way. We're going to take time to build this fancy, flashy, slick post that you're going to post one time.
Yeah.
Even if they did know someone in Ohio, do you think they're going to remember that next 14 months later when their friend in Ohio mentions it? You got to be posting that stuff regularly. So you can't get enough flashy, slick marketing posts. You just got to be talking to people about who you are and what you offer.
And I love that part because everyone's walking around with something that can help you talk and record what you say and put it out there, right? It's
Authentic. That's right.
authentic is the key. I think that's the what's working and playing today is it's not, the canned one piece of content that you see 200 loan officers post on a Monday morning because it just came available.
Right.
It's taking the same message in the content, but then putting it in that loan officer's own voice, perhaps in better doing it in a video so that your people, your customers, your prospects can get to know you through that vehicle. I think that's where I'm seeing a lot of traction with loan officers that are starting to build. And you hit it on this as well. They're building their database today so that they're prepared to be of service when somebody in that database is ready to be served.
That's exactly right. That's exactly right.
So good. This we could probably do this. We talked about this before we hit record. We could do this for hours.
I know,
and
I didn't know where you wanted to cut it. Yeah, exactly. Cut it.
oh, this was awesome. I love it. I think it's super helpful.
Good.
We're going to do this again because there's another layer we can, continue to kind of
I've
peel
got
at this thing.
Big other layer. Yeah, let's talk about the technology automation for these loan officers next. That would be
Exactly. So, Katherine, this was long overdue. Thanks for
Thank you.
spending a few minutes with me on the podcast. Congratulations on your role at AnnieMac, and I'm looking forward to watching great things happen there and having you back on in a future episode.
Thank you. We are doing some incredible things, so stay tuned for that. Happy Friday, and thank you, Brian.
Thanks, Katherine. And thanks, everybody, for tuning in. Come back again next Friday.